Hello students, welcome to AffairsCloud.
We have an app called Careers Cloud which you can go and download it from the Play Store. So after downloading it, you can easily log in using your Gmail ID. Once you have logged in, you will be redirected to a home page which contains 4 tabs beneath it. One is Home, the other is All Courses, next is My Courses, and the last one is a Doubt Session. So under All Courses, you can access various types of courses like Reasoning, Quant, English, and also exam specific courses can also be accessed under this All Courses. If you click this Crack Current Affairs, you will be redirected to this page. So under this, you can see various tabs that are available. So here, if you see, the current affairs will be available in English medium, this under Hindi medium, and here banking awareness, we will provide you the monthly compilation of the banking news and current affairs exam PDF, and also special current affairs, which includes mainly the budget, the union budget, the economic survey, which is very important from the exam perspective. And this is topic wise content where that topics news related to the specific topic, they will be combined together and provided to you. For example, see appointments. All the appointments in that particular month will be combined together in a specific place. And similarly, in case of banking, economic news, so all will be combined together. So this will be easy for you to relate to each other news. Next, you can access the daily current affairs on a daily basis, weekly basis, and also on a monthly basis. So after reading the weekly or the daily news, you can also attend our quiz in order to strengthen your knowledge. Under the monthly current affairs, if you see, there are 2 types of PDF that are available. One is the pocket PDF, the other one is the normal PDF. This pocket PDF will give you a brief content of our current affairs, and this will provide you a detailed analysis of the current affairs. So it is always preferable to read this detailed analysis and then have a go through of this pocket PDF. Next is that we also provide you the PIB news apart from the current affairs. So you can go and access our PIB news on a daily basis from this path. And as I mentioned, this special CA covers very special topics like budgets and economic survey. After reading the content provided in this PDF, you can go and attend the quiz given below. And next is the exam perspective PDF. So if you see IBPS PO mains, IBPS RRB clerk, SBI clerk, so these are all exam perspective PDF. So if you go and check, these PDF will contain around 5 to 6 months of the current affairs, which has high chances of high chances of being asked in this SBI clerk mains exam. So it is very useful to go and read this PDF from an exam perspective point. Today, we will be covering May 5th week banking and finance awareness news. Moving to the first news. The first news is about the new draft rules released by the Reserve Bank of India regarding the gold loan. So let us look into them in detail. The purpose of this is that to establish uniform rules and regulations for getting gold loans from banks and NBFC. So the gold loan rules, okay, whatever amount is being given and whatever purity check, whatever it has been done, that has to be uniform across all the banks and NBFCs. That is the purpose of this guideline. Okay. So here if you see, this is a draft guideline. This is not final. This is a draft. So there might be changes after this also. But as of now, this is a draft. So there are total 9 proposals. The first one is that loan to value ratio capped at 75%. What does this mean? It means that, say, suppose there is a customer and he gives a worth, just for an example I am telling, okay, he goes to a bank and he gives a gold that is worth of 100 rupees. Then the maximum loan that the bank can provide to the customer is 75 rupees. Okay. So that is what this means, 75. Loan to value should be 75. That means the loan value should not be more than 75% of the gold value. So here we saw that the gold value is 100 rupees, right? So the maximum amount that can be given as loan is 75 rupees only. So previously during the pandemic, that was very tight situation, many people lost job. So what happened at that time, the RBI relaxed the LTV ratio. That is up to 80% you can give. Okay, so if the customer had submitted 100 rupees worth of gold, then the bank can provide up to 80 rupees as loan. But now RBI is planning to reduce it to 75%. Next is proof of gold ownership required. So whoever is requesting for a bank loan, that is gold loan from the bank, they have to provide the proof of ownership. That is either the bill. When they had purchased the loan, the bill should have been provided, right? So the bill has to be submitted, or in case the bill has been misplaced or they are not able to provide the bill, then a declaration should be submitted. Okay, this is to ensure that no theft gold is submitted to the banks. This is the main reason behind this. Next is borrowers to get a purity certificate. So when the borrower submits the gold to the bank, the lender has to provide the purity certificate. Okay, that purity certificate, the carat, that 22 carat or 18 carat, that carat will be right. That carat should be specified, the grams, all these details, the stone details. Okay, all these details should be specified in that purity certificate and has to be provided to the customer. Next is only specific gold items is eligible as collateral. Now what does this mean? Only gold jewelry, ornaments, and then even specific gold coins, not all gold coins, specific gold coins that have a carat rating that is more than 22 carats. Okay, specific gold coins that are minted and sold by the banks and that purity should be minimum of 22 carat. Only they can be accepted as collateral. All this gold bars, gold ingots, all this and all, if you see, it cannot be accepted as collateral. Okay, gold jewelry, ornament and specific gold coins can only be accepted as the collateral. Next is loan against silver now allowed. So now we have to start providing loan against silver also, and the minimum purity should be 925. Okay, minimum purity should be 925, and loan against silver should also be provided for the customers. Next is loan limit. How much loan limit? Mainly here it tells how much gold can be pledged by the borrower. Okay, in case if it is a gold ornament, that is in case if it is a jewelry, then maximum 1 kilo per borrower can be pledged. Okay, and in case if it is a gold coin, then maximum 50 grams per borrower. Okay, in case it is an ornament, then 1 kilo. If it is a gold coin, then 50 grams per borrower. This is the loan limit. Next is calculation of gold value for loan amount. Here if you see, if there are various varieties or various purity, right? So 24 carat is there, then you have 22 carat, then 18 carat and all. Okay, whatever it is, say suppose the 18 carat gold has been submitted by the borrower to the lender. In that case, this 18 carat gold, it should be translated into 22 carat. Okay, and then only the gold value should be arrived. Okay, thus I am telling you once again, whatever carat, 18 carat is submitted means that value should be translated into 22 carat, and then only gold value should be arrived. Okay, the gold value should not be arrived at 18 carat. Gold value should be arrived only at 22 carat and not 18 carat. So the 18 carat, how many ever grams of gold is being submitted by the borrower to the lender, that should be translated or converted into 22 carat. Accordingly, there will be a calculation. That calculation you don't have to know. Okay, that will be converted and the gold value will be ascertained as 22 carat only. Okay. Next is detailed loan agreements mandatory. So here if you see, whenever there is a loan agreement, it has to be in detail. Here what all details should be mentioned in this agreement. The pledged gold, that is the description on it, the weight, total value, everything should be mentioned. Next, the process that will be followed if you default. For example, auction procedure. Suppose if you fail to repay, what will happen? They will eventually auction the gold, right? That should also be mentioned in that agreement. And how or when you will be notified before any auction. So even if you fail to repay, even if the gold loan becomes NPA, the borrower should be informed about the auction when it is going to happen. Everything has to be mentioned to the borrower. Okay, that detail should also be present in the agreement. The time frame for returning your gold once the loan is repaid. You have paid the loan, okay, completely. You have paid the interest and the principal part completely, and you have also closed the loan. Within how many days the bank should hand over the gold to the customer? This is what is mentioned here. That is the time frame. That is also mentioned. Next, all fees or charges that you might need to pay. Obviously, when a gold is submitted, there will be certain processing charge or something will be taken from the customer, right? The purpose is mainly to ascertain the purity of the gold, whether the gold that you have submitted, whether it is pure or not. that you have to ascertain, right? So the ascertaining charges will be taken from the borrower, and those charges, those fees should also be detailedly mentioned in this agreement. This is what is the detailed loan agreement mandatory. Next is timely release of gold collateral. So within how many days this gold collateral has to be given back to the borrower if the entire loan amount is repaid. Okay, so within 7 working days, this is important. Okay, within 7 working days, the lender should provide or give back the collateral to the borrower. Okay, remember, within 7 working days. If it exceeds, okay, if it fails to return the gold within 7 working days, then for each working day, okay, for each delay, 5,000 rupees has to be paid. That is, if it crosses even 1 day beyond that 7 days, then for that 1 day, 5,000 rupees has to be paid. So depending upon number of days it exceeds beyond that 7 working days, for each day, 5,000 rupees the lender should provide to the borrower. Again, I am telling you, this is a draft rules. All these 9 proposals, they are in the draft. They are not yet finalized, but these are the draft rules. Okay, remember the draft rules because they might be finalized also. So do remember the 9 draft proposals. Next is RBI proposes draft amendments to the KYC master directions to simplify the compliance. KYC is nothing but know your customer. So before onboarding the customer into your banking system, you have to know everything about your customer. So mainly what do you get when before onboarding a customer, what do? You get their Aadhaar. Aadhaar means like your address proof details. Then your individual ID proof details. So mostly what they give is PAN. This is to identify you, and Aadhaar is to identify the address. So these are the various details that are provided to the bank before onboarding any customer. And if it is loan, then few more extra details are provided. So regarding this is done. So mainly why it is important to ensure that the KYC is properly done. It is because no anti-money laundering activity should take place. No, fraudulent activities or terrorist financing, all this should not take place, right? So for that, a proper KYC check should be done, and only then the onboarding should take place. So here if you see, updation or periodic updation of KYC revised instruction is being provided. So here, reduce the compliance burden, enhance the customer convenience. So if any customer wants to update his or her KYC, then it should be convenient for them, right? Next, particularly for the low risk individuals. Next, beneficiaries of government and welfare schemes. So it has to be updated very easily because the low risk customers are mostly the beneficiaries of government welfare schemes. Okay, if the KYC documents are not properly updated, they may not get the benefits that the government wants to give them. Only when the Aadhaar details is properly updated, when the mobile number is properly updated, they will be able to transfer the government benefits to the customer, right? When those are not properly updated, they might miss transferring it. So for that, the customer convenience should be provided for any KYC updations or periodic updation or creation if they approach the branch. This also is draft. It is not yet finalized. This is also a draft agreement by the Reserve Bank of India. First is KYC updation at any branch. Suppose if you do not make transaction in your account, say for 1 or 2 years, then your account becomes inoperative. Okay, and after becoming inoperative, if you want to access your account, if you want to withdraw or deposit anything in your account, what you have to do is that you have to provide the KYC documents to your home branch. Home branch is where your account is present. Okay, you have to provide the KYC documents to the home branch. They will update your KYC documents in that account, and then your account will become operative. So this is how it works. But now RBI suggested that instead of only having the option to update the KYC in home branch, the option should be given that you can update your KYC at any branch. What if the person has shifted to a different place and they are not able to travel to that specific home branch place? So it will be very difficult for them, right? So at any branch, option should be provided for KYC updation. Next is use of video KYC. So if any customer wants to update their KYC via video call, then that option should also be available. Okay, that option should be able, that particular branch should be able to provide that option to that customer. So that should also be made available for customer convenience, for especially very elderly customer who can't travel, who can't even come out of their house. For them, this will be very, very useful. Next is assistance by business correspondents. So BCs, if you see, these are BCs they are people appointed by the bank. Okay, banks only appoint these business correspondents. So especially in areas where the banking structure, where the banking infrastructure is not available, in that places the business correspondents, they play a very vital role. So they, in especially heavy complete remote areas when it's difficult to establish a bank there, these business correspondents, what they can do is that they can go and collect the KYC documents and help in the updation of the customers' accounts. So that can be provided, so that assistance by business correspondents can be involved in this KYC updation, so that it will be very convenient and also ensure that there are not much inoperative accounts also. So let us now, these are the recent draft. Okay, these are the recent KYC changes that the RBI has drafted, not yet finalized. These are the recent draft. Okay, now we are going to check the previous amendments to the KYC norms. So before that, what amendments had RBI has done to the KYC norms? First is customer due diligence. So the financial institution must apply the customer due diligence process at the unique customer identification code level. What is this unique customer identification code level? So when a customer enters into the bank, okay, say suppose the customer enters into the SBI bank. So this SBI, for the first time it is coming and opening, the customer is coming and opening his or her account, right? So they will do a CDD. CDD is customer due diligence. That is, they will quickly verify all the details provided by the customer, whether it's right or not. You know, if the person provides Aadhaar, then with the UIDAI site, where it has been issued, it will cross check, because there might be chances, right? He might give a fake Aadhaar. So all this proper due diligence should be done, and only after that this account should be assigned. Okay, the unique customer identification code level is nothing but each customer will have one unique customer identification code. Okay, you might have multiple accounts. One person can have multiple accounts like savings account, then current account, then RD, FD. So many accounts he will have, but only one customer identification code will be assigned. Okay, before assigning this customer code identification, a proper due diligence should be done by the banks. Now, if you see, suppose he comes again in the future to open a new FD, that time the CDD is not required, because already CDD is done at the customer identification code level. So if he's going to open a new bank account or he's going to open a new FD account, that time it is not required, because already this customer identification code is established. Okay, only when for the first time he's coming, this due diligence has to be done properly by the banks. Next is high risk monitoring. So enhance the monitoring for the high risk accounts. So majorly the bank accounts, they will be classified into various risks. As of now, there are 3 risks: low risk, medium risk, and high risk. So all the politically related people, political persons, they all come under the high risk. Okay, so depending upon their transactions, their work profile, they are classified into low, medium, and high. And high risk customers, those monitoring should be more than the low risk customers. Okay, say suppose when low risk customer, there are a normal IT salary people and all, the risk in that case is lower, right? So you can't have the same amount of monitoring on the low risk and the high risk customer. So high risk, which means that the risk of happening wrong activities is very high. So you have to monitor very keenly in the high risk than the low risk. That is what is mentioned here. Next is KYC updation. So if you see, the term periodic updation replaces the updation. So previously the updation was word was there in the KYC master circular. Now it has been replaced with periodic updation. So you have to know the timeline of this updation. So if you see, a customer who is classified as high risk, they have to update their KYC every 2 years. That means that every 2 years the customer has to provide their latest details like Aadhaar or PAN, whatever is the latest, that has to be provided to the bank. Next, medium risk every 8 years and low risk every 10 years. Okay, bank has the right to freeze the account if the customer does not submit the KYC norms. So the KYC norms, the bank, like it's if you say suppose your account has been opened today, okay, 2025, and you are a high risk customer, so you have to give the next KYC documents, that is all the updated KYC documents or even the existing KYC documents in 2027. If you fail to, even after multiple reminders from the bank has the right to freeze your account. Okay, so that is why KYC updation is very, very important and customer has to follow it. Next is central KYC records registry integration. So regulated entities must upload or update the KYC records to the central KYC record registry within 7 days of receiving new customer information. Say suppose a customer is there and for the very first time he is opening an account in a bank, and this bank collects all his details, and this details, if you see, it has to be uploaded in this CKYC registry. Okay, this CKYC registry, it is being used across various institutions, not just across banks, even financial institution, even mutual funds, even the insurance industry. So across various places, this CKYC registry is being used. Say suppose the person has opened bank account here, and the bank account in this bank A, and this bank A has uploaded all his details in the CKYC registry, and he wants to now open a SIP. So he visits this mutual fund place. This mutual fund, no, he does not have to collect the Aadhaar details separately again. He can just access the CKYC and he can get all the details from the CKYC registry, because already the bank has uploaded all those details in the CKYC registry. So that is why this is very, very useful. Okay, so if you upload the CKYC in the CKYC registry, then that can be used across various institutions like mutual fund, insurance, and various like even the credit information company can also have access to this. Okay, this is the purpose of the CKYC registry, and a regulated entity has told that within 7 days, suppose you are opening account on 1st, okay, then by 7th you have to have uploaded all the details in the CKYC. That is the timeline provided by the RBI to the regulated entity to upload the details into the CKYC registry. For new services, RE must use the KYC identifier from the CKYC instead of requesting duplicate documents unless data is outdated or incomplete. So as I said, if a person is going and visiting mutual fund, the mutual fund house, instead of asking the KYC documents again, he can go and access the CKYC. But unless if he feels that CKYC is not complete or it is outdated, he has changed his mobile number, he has changed his address, that time he can go and ask the KYC documents again from the customer. So here UAP Nodal Officer Designation Change. This is Unlawful Activity Prevention Act. Okay, this is nothing much you have to know. Just you have to know that the Central Node Officer is now designated as the Joint Secretary. Next is the terminology standardization. So this also, the references to section have been replaced with paragraph. So these 2 points are not important, but the first 4 points you have to remember. So these are the recent KYC amendments that are already made by the Reserve Bank of India, and we have also discussed the draft that has been filed by the Reserve Bank of India. Next is RBI Central Board approved record surplus transfer of 2.69 trillion to the Government of India for financial year 25. So we know that the RBI has transferred a huge surplus amount to the Government of India, and if you see the 615th meeting of the Central Board of Directors, in that only this amount was approved. Okay. So they had approved in the 615th meeting, the amount was approved, and the amount is 2,68,590 rupees. 2,68,590 crore rupees. This is the amount that is to be transferred to the Government of India. Okay. So this, if you see, this is 27% more than the financial 24 surplus. So compared to the previous year, 27% more, which is very, very huge. The main reason for this increase is strong earnings from the foreign exchange operation. Okay, so with gross dollar sales surging to 399 billion in financial year 25 compared to just 153 billion. So almost double. Okay, the foreign exchange operation, it has almost double. That is the dollar sales, if you see, it has been from 153 to 399, more than double actually. So that is the main reason for the increase in income and also increase in the surplus. So if you see, RBI transfers the surplus in accordance with the section 47 of the RBI Act. So as per this section, RBI has to transfer the surplus to the Government of India, and that is why now it is doing also. So this, if you see, this dividend expected to reduce the fiscal deficit of the government by nearly 20 basis points from the budgeted level of 4.4% of the GDP. So the budget level is 4.4% of the GDP. What is fiscal deficit? See, when the expenses are more than the income, you have to go and borrow, right? Just like any household. Say suppose your income is 10,000, okay, but your expense is 12,000. So how will you manage just 2,000? Obviously, you will borrow from your family or friends or from bank. Similarly, the government also does the same. So that is called as the physical deficit. Okay, the borrowing that has to be done by the bank when the expenses are more than the income. Now, if you see, RBI did not expect this much of surplus from the Reserve Bank of India. Government of India did not expect this much of surplus from the Reserve Bank of India. So when the income increased, obviously the physical deficit will decrease, right? That is, the borrowing will decrease, right? So that is what is mentioned here, right? That borrowing will decrease by 20 basis point because of this surplus. That is, surplus is 2.68 trillion. Economic ECF is Economic Capital Framework. So this is a framework which allows the surplus transfer for any accounting year by RBI. Is determined by the Economic Capital Framework adopted by RBI in 2019 based on the recommendations from the expert committee chaired by Dr. Bimal Jalan, former RBI governor. Okay, so this RBI governor only recommended this formation of the Economic Capital Framework. What is this Economic Capital Framework? See, we know that RBI makes income, okay, and after minusing the expenses is the profit, and this profit is what is transferred to the Government of India. But instead of directly passing on the profit entirely to the Government of India, what this Economic Capital Framework has mentioned that there has to be certain risk provisions made. Okay, just like any risk exists for the normal banks like SBI, HDFC, there are also risks for the RBI also. Like if you see, credit risk exists for RBI. What does credit risk mean? When you give a loan to a person and if that person fail to repay, that is called as credit risk. Operation risk also exists in RBI. Operation risk means that when any system failure happens or when the employees do any mistakes, that is called as operation risk. Then financial stability, monetary and financial stability. Then market risk, because RBI also invest in the market, right? They also invest in treasury bills, they also invest in foreign bonds. So market risk may also arise. So in future, if these risks arise and if a loss happens, do we have money to cover that loss? Do we have money to cover that risk? So for that, a provision has to be made. Okay, and that is what is called as contingent risk buffer. To handle the risk in the future, certain money is allocated by the Reserve Bank of India in the form of contingent risk buffer, and then the remaining amount is sent as surplus to the Government of India. And recently, if you see, they have increased the contingent risk buffer. The contingent risk buffer, if you see, it is maintained in percentage of balance sheet. Whatever is the balance sheet amount of the RBI, in that percentage, this contingent risk buffer is maintained. Okay. So previously, if you see, the contingent risk buffer was 6.5%. Last year, the contingent risk buffer that was maintained by the RBI was 6.5%, and now it has been increased to 7.5%. Okay, the upper bound is increased to 7.5%. So this year, the RBI has maintained 7.5%. That is, has retained. Okay, it has kept 7.5% as contingent risk buffer, and then only transferred the surplus to the Government of India. So the 7.5%, why there was an increase from 6.5% to 7.5%? Because of the risk. Okay, the risks are increasing. Okay, so that is why the buffer also increased. So apart from covering all the expenses like various rent expense, the salary expense, various other expenses, also covering allocating certain amount as contingent risk buffer, the remaining surplus is only sent to the Government of India. So Economic Capital Framework, it will try to find out how much amount should be allocated for these risks, that is how much risk provisioning should be done, and then only the remaining surplus will be transferred to the Government of India. What you have to remember here is that this Economic Capital Framework was adopted in 2019 by RBI, and that committee head was Dr. Bimal Jalan, and the recent contingent risk buffer that was maintained by the RBI, if you see, it was 7.5%. Okay, this contingent risk buffer, it does not have a single value, it is a range. The range here is 4.5% to 7.5%. Okay, this is the range that the RBI should maintain. The recent contingent risk buffer range is 4.5% to 7.5%. That is minimum 4.5% to maximum 7.5%. And now in this year, they have chose to maintain 7.5% of the balance sheet. Remember, you have to know 7.5% of what? Okay, 7.5% of the RBI's balance sheet should be maintained as contingent risk buffer as per the latest update. Next is about the license provided by the Reserve Bank of India. So, quick pay Okay, it is a fintech platform of New Delhi based Quick Touch Technologies Limited. It has received in principle approval from RBI for a payment aggregator license. Okay, in principle approval, not final approval. It can start operating as a payment aggregator only after getting final approval. Now it has received in principle approval. Next, GetPay. Okay, GetPay, it has received final approval from the RBI for a payment aggregator license. Okay, and this, if you see GetPay, it is the first company from Rajasthan to receive this payment aggregator license. Remember, GetPay, QuickPay has received in principle and GetPay has received the final approval. Next is Capital India Finance Limited. Capital India Finance Limited, it is a middle layer NBFC. It has received approval from the Reserve Bank of India. For what? To sell its subsidiary to the Mumbai-based Weaver Services Private Limited. Okay, this CIFL is selling 100% of its stake. Okay, entire shareholder has been transferred. This is not even going to hold 1% shareholding. Entire 100% stake has been transferred from the Capital India Home Loans Limited, that is the subsidiary of CIFL. It has been transferred to the Weaver Services Private Limited. So 100% stake transferred, and the transaction value of this 100% stake is 267 crores. Okay, so CIFL will get 267 crores, and this Mumbai-based Weaver Services Private Limited will be the new owner of this Capital India Home Loan Limited. So Quick Touch Technology CEO is Sahil Kumar, headquartered in New Delhi, and CIFL CEO is Pinnak Jain Shah, headquartered in Mumbai. Next is about life insurance sector. So life insurance sector, it is in India, it is expected to grow at 10.5%. So this, if you see, this data is as per the report released by the Allianz Global Insurance Report. The Allianz Global Insurance Report 2025 has been released, and in that it has stated that the India's life insurance is expected to grow across 10.5%. Okay, it is expected to grow 10.5% annually across the 10 years. So across 10 years, if you see, the India's life insurance is expected to grow 10.5% annually compared to the global average of 5%. So almost double. Okay, it is a very good number. So global average, it is expected to be 5%, but India's life insurance average, if you see, it is expected to be 10.5% for the next 10 years. So most of the growth will be in the life segment. We don't know, life insurance is there, health insurance is there. So in that, if you see, most of the insurance growth will be in the life segment, and China is expected to lead the region in the absolute growth at 7.8% annually. India is poised to emerge as the fastest growing economy with a projected annual growth of 10.5% over the next decade from the 25 to 35. Okay, if they ask you in absolute growth term, if you see, it is China. But if you see in the percentage growth, that is the fastest growing, or in the percentage growth, if you see, it is India. What is this absolute or the percentage means? I tell you example. The main difference is that the base. Okay, if you see the China, the base value is very huge. 7.8% on what? Say suppose China's total life insurance value, this insurance value is 1000 crores. Okay, so 7.8%. 7.8% of 1000 means 78 crores. Okay, it is expected to grow at 78 crores. This is what this means, right? Here, in case of India, the base is less. But if you see in India, the base is less. Say suppose India's total life insurance value is 100 crores. Okay, in China, we saw the base was 1000 crores. Say in India, it is 100 crores. And in India, it is expected to grow 10.5%, which means, say it is just 10% also, which is mean how much value it is? 10 crores. Okay, is 10 crores greater or 78 crores greater? 78 crores is greater. So this is what is called as absolute terms. Okay, percentage wise, we are growing at 10%. But absolute growth, if you see here, it is growing by 78 crores, but we are growing just by 10 crores. So that is why I am telling China is expected to lead the region in absolute terms. But here, over the percentage growth, if you see, we are going to lead as the fastest growing economy. The property and casualty insurance segment in the global insurance sector will grow by 4.5% per year until 2025. So India's entire insurance market across all segments expanded by 10.6% in 2024, up from 7.7% in 2023. So insurance sector growth in 2023 was 7.7%, but in 2024 it was 10.6%. with premium income touching 145 billion. So in 2024, if you see, the premium income was $145 billion. Okay. The health insurance, if you see, it saw a remarkable growth of 20.8%, and life insurance, which is the major market, okay, which is the major shareholding of the market, insurance market, holding almost 75% of the market, experienced robust growth of 10.6%, increasing from 7.6%. Okay. So the life insurance, it grew by 10%, and the health insurance, it grew by 20%. India's insurance sector reforms. So what changes had India done in the insurance sector for its improvement or for its faster growth? If you see, India has increased the FDI limit in the insurance from 74% to 100%. So in the insurance sector, if you see, the foreign direct investment, previously it was just 74%, but now it has increased to maximum 100%. The FDI limit in insurance is 100%. This is a very important point that you have to remember, because if they ask you what is the current FDI limit in insurance, you have to know that it is 100%. Next, also in the previous fiscal year, if you see, the Indian public sector general insurance companies, they witnessed a major turnaround, with all of them becoming profitable again after historical losses. So this Indian public sector general insurance company, they were facing heavy losses, okay. But recently, due to the Government of India capital infusion, okay, the Government of India had infused a lot of capital, and because of the certain other reforms taken, they all became profitable the previous fiscal year. So if you see, the main reason behind this is Government of India infused 17,450 crores into these insurance company between 2019-20 and 21-22. So now all the public sector general insurance company are all profitable. Firstly, they were loss making, now they are all profitable, and the FDI limit in the insurance is 100%.
We have launched a new course called Static Banking Awareness course. Now this course will be helpful for students who are preparing for the banking exams and for the regulatory body exams. And also, recently you would have seen Paytm Bank in news frequently. So when an aspirant reads this news, he would have ample number of questions like what is a payment bank, what are the norms for it, and which is the committee that has launched it. So this Static Banking Awareness course lays a foundation to the current banking and finance news. Now, you have to download our AffairsCloud to access this course. Once you have logged into our app, you can go and click this all courses icon, and then you'll be redirected to this page. In this, you have to go and click the Static Banking Awareness course, and under the details tab, you will be able to see a brief about this course. And under the part tab, it will contain all the contents, all the topics of the contents that are currently available in this course. We are working on this continuously, and this will be completed within 2 months. Under the free tab, you can go and access one content, that is the origin and development content, for free. You can go and read this content and have an idea about this course. After reading this content, do attend the quiz that is also available under the same tab. Now, our team has allocated ample amount of time and resources to curate this content. We have created this content from various books and from various verified websites. Our content is better than any book that is available in the market. This is because we update this content on a dynamic basis. For example, there are currently 39 DRTs that are available in the country now. In future, if one more DRT is created or added, then it would become 40. So we would update this content on a dynamic basis. But in case of books, you have to wait for the next publication for this updated content. Nowadays, a lot of practical questions have been asked in the banking exams. For example, how many public sector banks are available on the stock exchange? Which is the payment bank that is being listed on the stock exchange? So, we try to cover as many practical questions as possible in this course. Apart from this, we also provide you a question bank that will contain around 3000 questions and the previous year questions along with it. We also have a dedicated tab that will release the important RBI notification and the frequent news released by the RBI. You can use this code B15 to avail 15% discount. This is one of the highest discounts that we have offered until now. So do avail this code B15 while you purchase the course.
The next news is about the recent RBI data that has been released regarding the outward remittance. Outward remittance is nothing but people who are residing in India, they send money for their kids studying outside India or for other relatives who are residing outside India. Okay. So this is sent under the LRS scheme, that is Liberalization Remittance Scheme. Okay, liberalized remittance scheme. Under this scheme, this money has been sent, and there has been a decline that has been noticed. So if you see, Compared to the previous year, that is compared to financial year 2024, there has been a decline of around 6.85% year on year, and currently it stands at 29.56 billion. So, how much money has been sent in the form of outward remittance? 29.56 billion has been sent in the financial year 25. So, the decrease here is because of the global uncertainty. Stagnant domestic growth, stagnant domestic salary. So when people in India itself, they do not have much money, then how will they send it outside India? So due to these reasons, there has been a decline. So in spite of that, if you see, in the month of March 2025 alone, there has been a 10% increase compared to March 2024. So compared to March 2024, there has been a 10% increase, that is to 2.55 billion. So now let us look into the various types of outward remittance. If you see, for the remittance sent for studies purpose, there was a huge decrease, that is 16% decrease, and then followed by international travel remittance. Okay, when people have to travel outside, right? So that has been quite less, that is just a 0.25% decrease. Just marginal amount of decrease was observed in international travel remittance, that is 0.25%. Investment in equity and debt, okay, the shares and the bonds of the foreign countries, that it has seen an increase of around 12%, and investment in immovable properties has seen an increase of 33%. So you might be wondering whether here there is a 33% and 12% increase, then also there is an overall decrease. How is it possible? That is because if you see, this investment in equity and immovable property, they are just a percentage of the total outward remittance. If you see, out of this 29 billion, if you add the investment in equity and immovable property together, maximum the amount will be just 2 billion. That is their portion, the portion of them, that is their percentage or contribution in this total outward remittance is very, very less. And that is why a 33 or 12% increase does not matter much. In case if you see, the international travel remittance, they account for almost 60% of the outward remittance. This is a very important point you have to know. Out of the total outward remittance, no, international travel remittance alone account for 60%. And you have to know certain static information about this LRS, that is when this was introduced. So this was introduced in 2004, and now if you see, the limit is $250,000. Previously and all, the limit was 25,000 and all. Slowly it got increased, and now the limit is $250,000. The next upcoming set of news and all, it will be a one-liner news only. Okay, so it will be in a very short form. So Sebi bars the former IndusInd Bank CEOs and 4 others. So the Security Exchange Board of India, it has barred the former CEO of IndusInd Bank, Sumant Katpalia, and 4 other senior officials, Arun Khurana, Sushant Saurabh, Rohan Jatana, and Anil Marco from trading. Okay, so they can no more use their account for trading purpose. This is because they misused the unpublished price sensitive information. Okay, for their own advantage, they had made money by executing certain transactions. Okay, they had if you see, they had sold certain shares even before publishing this unpublished price sensitive information. What happens is that the CEOs or the senior officials, they will have access to the company's information, okay, even before it is published to the media. So even before it's published to the media, or even before it is given to the SEBI. So if they know that there's a bad news that is going to come, what they will do is that since this is sensitive and unpublished, so they will use it and they will offload their shares, that is they will sell their shares at the high prices. So when this information publishes the next day, the share price will go very down. But they had sold the share price the previous day itself when the price was at a good amount. Okay, so by this way they had gained profit. Okay, so they mainly utilize the unpublished price sensitive information for their own advantage, and that is why the SEBI has banned these many people. Next, if you see, SEBI has given the permission, that is Geo BlackRock Asset Management Company, to start their own mutual fund business. And if you see Geo BlackRock Asset Management Company, it is a 50 joint venture. Okay, that is 150 is held by the Geo Financial Services, the other 50 by the BlackRock. So these two together have formed this asset management company, and now they have got the approval from SEBI to start the mutual fund business. Next is Indian Post Payment Bank has partnered with Aditya Birla Capital. Okay, this is a non-deposit taking NBFC. NBFC, we know there are 2 types, right? One that can accept deposit from the people and the other that cannot. So this is a non-deposit taking NBFC. So this partnership, if you see, to expand the financial inclusion. This Aditya Birla Capital products will be made available to the Indian Post Payment Bank customers in the rural and the semi-urban area. So here they can access this Aditya Birla Capital products. Okay, so that will be provided to these customers. If you see, the Indian Post Payment Bank is the only payment bank that is owned by the Government of India. This is a very unique point that you have to know. Next is IndusInd Bank have signed an MOU, Memorandum of Understanding, with Atal Incubation Center Software Technology Park of India. Here remember, Atal Incubation Center Software Technology Parks of India next. Okay, this if you see, it is a special purpose vehicle of a Bengaluru based Software Technologies Park of India. Okay, this AIC STPI next, it is a special purpose vehicle of the Bengaluru based Software Technology Parks of India, and this works under the Ministry of Electronics and Information Technology. Now, what is special purpose vehicle? You would have heard about special purpose vehicle in lot of news, right? So, what is special purpose vehicle? It is nothing but it is a separate entity. Okay, so say suppose in case of Government of India, this is a separate entity. Okay, that entity job is to, that entity is assigned a particular project or particular task. Okay, for example, let us say that the Government of India or the state government, they want to develop a metro. Okay, what will they do? The government will appoint a special purpose vehicle that will take care of this entire metro job. That is to to hire the contractors. You have to collect money, right? How it will cost crores and crores to construct the metro. So how to collect money, how to raise funds and construct the metro properly. Everything is taken care by the special purpose vehicle. So this particular task is assigned to the special purpose vehicle. That is the main purpose of a special purpose vehicle. Because Government of India, if you see, it has lots of jobs in their hands. Should not be confused. So they assign a special purpose vehicle and assign that particular project or task to the special purpose vehicle. That is the purpose of this SPV. Okay. So if you see this AIC, what is the purpose of this MOU? It is to improve or nurture the innovation and entrepreneurship, okay, among the startups and the MSMEs, supported by this AIC STPI next. Okay, whichever startups and MSMEs are supported by this SPV, for them various financial products will be provided by the IndusInd Bank. This is the purpose of the MOU. So if you see, customized banking services, financial literacy and operation tools to the startups and MSMEs supported by or incubated by the special purpose vehicle. This is the purpose of the MOU. Next is Northeast Small Finance Bank. It has rebranded as the Slice Small Finance Bank. So RBI has given the approval to rename the Assam-based Northeast Small Finance Bank to Slice Small Finance Bank. So if you see, this is followed by the merger. First, the merger of these two banks took place in October 2024, and now the rebranding has taken place. Northeast Small Finance Bank MD and CEO is Satish Kumar Kalra. Next is about the GDP production. So the Gurugram-based ICRA, it's a credit rating agency. It has projected India's GDP. So the projection, if you see, it is expected in Q4 financial 25, it is expected to grow at 6.9% and up from 6.2%. So in Q3, if you see, India grew only at 6.2% now, but in the Q4, it is expected to grow at 6.9%, which is a very good value. But if you see, the overall GDP growth of financial 25, it is expected to grow at 6.3%. When compared to, it grew at 9.2%. So compared to previous year, if you see, the growth is quite less. And the gross value added, if you see, it is expected to grow at 6.2% compared to 8.6% the previous year. Okay, remember the values. At least you have to remember the financial year values. If not the quarter values, it's not so important, but you have to remember the financial year values. So if financial 25 GDP growth estimation is 6.3% and the gross value addition is 6.2%. Next is NRA Deposits inflows surged to 11-year high of 16.2 billion in financial 20. So a lot of NRIs who are residing outside India, they send money to India just not to maintain their relatives, but also as an investments. Because the banks in India, they offer quite attractive interest rates. So NRIs, they send money and they open FDs in India. So that if you see that inflow, it has surged a 11-year high. So NRA deposits in Indian banks soared to 11-year high in financial year 25. The total inflows reached 16.16 billion in financial 25. Remember this number, very important. 16.16 billion in financial year 25. So it is a 9.9, almost a 10% increase compared to the previous year. So as of March 2025, if you see, the total NRA deposits stood at 164.7 billion. This 16.16 billion is the inflow in financial year 25 alone. Okay, in this one financial year alone, 16 billion has come to India. And overall, if you see, as of March 2025, the total NRA deposits stood at 164.7 billion. Next is Reserve Bank of India. It has established a 6-member payment regulatory board. Okay, 6-member payment regulatory board. This will replace the existing board for regulation and supervision of payment and settlement system. Remember, this payment regulatory board will replace the existing board for regulation and supervision of payment and settlement system. Okay, now let us look into the composition of this board. So if you see, the chairperson will be the RBI governor, and the members, if you see, deputy governor who is in charge of this task, that is payment and settlement system. Next, RBI nominated officer. Next, 3 central government nominees. Next, if you see, permanent invitees. Apart from the chairperson and members, you also have permanent invitees, principal legal advisor of the RBI, and domain experts in payment settlement, IT or law. Okay, the current principal legal advisor of RBI is Unikrishnan A. So this is the composition of the board. Remember, okay, payment regulatory board replacing the board for regulation and supervision of payment and settlement. Next is Axis Bank and Bengaluru based Super Money. Okay, Bengaluru based Super.Money. It is nothing but a fintech platform. This fintech platform, it is backed by Flipkart. Okay, this fintech platform, it is backed by Flipkart. So together they have launched a co-branded credit card that is called the Axis Bank Super.Money RuPay credit card. So the various features, if you see, like cashback benefits, around up to 3% of cashback will be provided on scan and pay. Next, 1% cashback on various eligible spends, and also a maximum cashback of rupees 500 per billing cycle. Then fuel charge surcharge waiver is also there, that is 1% waiver on transaction between 400 and 4000 if it is used on a fuel. Okay, that is the petrol. Next, there is no the important thing is there is no joining or annual fees. That is a very important thing. Okay, here you have to remember only 2 things. One is that who are the 2 parties involved here. Here it is Axis Bank and Super.Money. They too have launched this credit card. And one more important thing is that this fintech platform, it is backed by Flipkart, and here no joining fees, no joining or annual fees is applied on this credit card.
Thank you for watching the session. I hope you had enjoyed it. We're also available in Telegram under the name AffairsCloud_official. We also have an Instagram handle. Thank you.